Every currency collapse in history has followed the same pattern, every single one. From the Roman denarius to the Venezuelan bolivar, the sequence is identical. 5 stages, and once you see this pattern, you cannot unsee it. Stage 1, debt accumulation. Stage 2, monetization. Stage 3, inflation emerges. Stage 4, loss of confidence. Stage 5, collapse. The timeline can vary, the triggers can differ, but the sequence is a law of economic physics. And here is what should terrify you. America is no longer at the beginning of this journey. We are at stage 4, the point of no return, the stage right before the collapse. Let me show you what each stage looks like, using the graveyards of failed currencies as our guide. Then, I will show you the undeniable evidence that America is in the final act. Stage 1. The unpayable debt. This is always the genesis. A government faces a crisis, war, depression, social programs, and chooses debt over discipline. Rome defended an overextended empire. With no new lands to plunder, the legion's cost became a crushing burden. Weimar Germany was born under the impossible weight of WWI Reparations, 132 billion gold marks, a sum designed to cripple a nation. Argentina layered debt upon debt through military juntas and populist programs, leading to 6 currency collapses. Zimbabwe financed a foreign war and a disastrous land reform, exploding spending as revenue vanished. Now look at America. The war on terror, $8 trillion. The 2008 bailouts, trillions more. The COVID response, $6.5 trillion in 2 years. The national debt is $37 trillion, a 132% debt-to-GDP ratio. For perspective, Weimar Germany's ratio was 40% when it started printing. Rome's was around 30–40%. America's burden is 3 times heavier at the starting line. Stage 1 is complete. The debt is accumulated and mathematically unpayable. Stage 2, turning on the printing press. When the market refuses to lend more, the government turns to its central bank. The central bank creates new currency out of nothing to buy the government's debt. This is monetization, the point of no return. Rome debased the denarius, reducing its silver content from 95% to 5% in 2 centuries. Weimar had the Reichsbank discounting treasury bills around the clock, with over 1,000 presses running 24/7. Zimbabwe and Argentina printed their currencies into oblivion, repeatedly. Now look at America. In 2008, the Federal Reserve launched quantitative easing, creating money to buy government debt. Its balance sheet exploded from $800 billion to $4.5 trillion. Then came COVID. The Fed announced unlimited QE, creating $4.8 trillion in 2 years. Its balance sheet peaked at $9 trillion. At one point, the Fed was buying nearly half of all new Treasury debt. This is textbook, explicit monetization. Stage 2 is complete. The poison is in the bloodstream. Stage 3. The fever breaks. The new money floods the system. More currency chases the same amount of goods, and prices rise. The government's response is always the same: denial. Rome's Diocletian imposed price controls, a desperate failure that proved prices were out of control. Weimar blamed speculators and foreign saboteurs as a loaf of bread went from marks to billions of marks. Zimbabwe and Venezuela blamed Western sanctions and economic war as inflation hit millions of %. Now look at America. In 2021, CPI hit 7%. The Fed called it transitory. By 2022, it hit 9.1%. But official CPI is a manipulated metric. Using 1980s methodology, true inflation was near 17%. The real inflation was in assets, homes up 62%, stocks doubling, gold and Bitcoin soaring. This is the new money finding a home. The Fed raised rates but cannot raise them enough without bankrupting the Treasury. Stage 3 is here. The fever is burning. Stage 4. The run for the exits. This is the critical juncture. The smart money realizes the currency is doomed and begins a silent run. Confidence shatters. Romans hoarded old coins and demanded payment in gold. Germans in 1923 sprinted to spend their wages the second they were paid, buying anything tangible. Argentines and Venezuelans now automatically convert their pesos and bolivars into dollars the moment they receive them. Now look at America. The run has begun. Central banks are dumping dollars. The dollar's share of global reserves has fallen from 71% to 58%. China and Russia have slashed treasury holdings and are buying gold at a record pace. The smart money is fleeing. Billionaires are buying farmland, water rights, and Bitcoin. Ray Dalio warns of debasement and recommends gold. BRICS nations are building alternative financial systems to bypass the dollar. This is not speculation, it is capital flight. The flight into real assets. Stage 4 is underway, the foundation is cracking. Stage 5. The collapse. The currency ceases to function. Weimar Germany. The mark went from millions to trillions per dollar in months. Society fractured. Zimbabwe abandoned its own currency after inflation hit 79 billion% per month. Venezuela lopped zeros off its currency repeatedly to no avail. The collapse is always followed by wealth destruction, social chaos, and the rise of extremism. So, where does that leave America? The metrics are flashing red. 1. Foreign dumping. Central banks are selling treasuries while debt explodes. 2. Gold signal. At $2,700, gold is screaming a warning of debasement. 3. Negative real rates. Savers are losing purchasing power, a hidden tax. 4. Debt servicing. Interest payments are $1.2 trillion a year, more than defense. This is unsustainable. 5. Money supply explosion. M2 grew 40%, GDP did not. The inflation fuel is banked. Based on the historical pattern, Stage 5 for America is likely between 2027 and 2030. A debt ceiling crisis, a major bank failure, or a geopolitical shock could accelerate this timeline dramatically. What must you do? You cannot stop the pattern. You can only control your position within it. 1. Exit dollar traps. Sell long-term bonds. They will repay you in worthless dollars. Hold minimal cash. 2. Move to real assets. Own physical gold, the 5,000-year-old antidote to currency collapse. Consider Bitcoin as digital gold. 3. Leverage fixed debt. A low, fixed-rate mortgage is a hedge. You'll repay it with devalued dollars. 4. Diversify jurisdictions. Not all currencies will collapse. Hold assets outside the dollar system. 5. Prepare psychologically. The end of a currency is traumatic. Being financially secure allows you to be a stabilizer, not a victim. This is not theory. This is pattern recognition. Rome, Weimar, Argentina, Zimbabwe, Venezuela all followed the same 5 stages. America is now at stage 4. The clock is running. The choice is yours. You have seen the pattern. The only question is whether you will act on it before the window of preparation closes for good.